Yo! Yo! Sorry, running a little bit late there, guys. How's everyone doing? Let me just fix the camera. I think that's alright now, isn't it? Yo, guys, how's it going? The final stream of the year. Let's get it. There we go. Final stream of the year. Good day to you too, Magic City Trader. Hope you're doing well. Right, like up the stream if you're ready, guys. Afternoon, Dan, how's it going? And Scott, how's it going, guys? Like up the stream if you're ready to get started. The final stream of the year, guys. Longs look alright. It's kind of mixed at the moment. I'll show you exactly what I'm seeing in a second. It kind of makes sense. The bias kind of aligns with that, but yeah, last stream of the year, guys. Final stream before Christmas from today. Not the final stream of the year, yeah. Until the 20th of January. So literally a month off. Now, there's multiple reasons for this. Before we get started, I just want to explain why I'm doing this. First of all, you'll see today that this December price action is not really the best at all. That's reason number one. I don't really trade December, and then the start of the new year is also the same. The general rule of thumb that I've learned from people who I used to learn from is that you don't really want to trade December at all, and then the first few weeks of January. But what I've decided to do, considering that this is my first year of teaching people, what I decided to do was basically just have a few weeks into December, see how it goes, and it doesn't really look like it's the best. We had a good first week, it gave me confidence, but yeah, we're having a month off. We come back for the new year on the 20th of January. But today, we're going to see what the markets are giving us, seeing if they give us anything. And yeah, we're having a month off. In that month, I just want to quickly say before we get started, in that month off, in the month between today and the 20th of January, there's going to be tons of new stuff. We're going to be doing a couple streams, maybe, for the back testing and like live lectures. If you guys decide it, we'll do a vote in the Discord for that. But there's that, and then there's a free course rebuild, just rebuilding it for the new year, rebuilding the Discord, adding some new features in for like new free content, maybe upgrading the market outlooks again, looking to upgrade the live streams as well, the way I do the live streams, and yeah, just overall growth over the next 4 weeks regarding everything but the streams, technically. Hi Bill, how's it going? So yeah, guys, we are taking a month off after today. I want you to do this as well with me. If you're looking to trade through this week or next week and every other week until I'm live again and then continue, just if you're looking to not have any breaks, that's a very big mistake, because one, it shows greediness. Like, it's good to practice the discipline of taking a step back from trading. That's like discipline. But also the markets are very, very choppy, and if you don't take a break, you will see that. You will get burnt, I can promise you that, because it's just not what it seems at all. Lots of people, like, you have to think about it in terms of like the big banks. Okay, this is how you have to think to be profitable, really. You have to think in terms of liquidity and big banks. Technically just sums down to big banks, but most of the people who are trading for the big banks, like Barclays, JP Morgan, just to name a couple, really, they're the two biggest ones. Then there's George Schwab, all those companies, all those big banks. The people that trade for them are going to be taking week, 2 week, 3 weeks maybe off for Christmas. And also there's the bank holidays themselves. So that alone is the reason not to trade it. But then also no one else really trades it. And then you also have the new year. And there's also a lot of talk about the bull run finishing as well, especially with crypto. Everyone's saying the bull run's over, XRP is going down, Bitcoin's going down, whatever. Now, that isn't necessarily true, but that's just going to add to the volatility. So if you're looking at trading through these, next 4 weeks, really, you're going to get burns. And it also shows a lack of discipline and, an excess of greed. So don't be greedy, be disciplined, spend time with your family, touch some grass. And we come back to the charts on January. But we're going to look at the markets today. We're going to start with the fundamentals as we always do, then make our way to the technicals. I'm going to show you the updated journal as well. But as I said, for the next 4 weeks, no streams, no market outlooks. I'm going to be looking to improve the whole cycle of all the free stuff I'm giving out, all the free course, the free documents, the free PDFs. The free market outlooks are going to be getting a revamp. Same with the live streams. Same with the YouTube videos. Same with the Discord. Same with the actual paid course as well. We're going to be starting pre-New York streams for the premium, but we're not going to talk too much on that. Hey Gustavo, how's it going? And Abby, nice to see you here. Nice to see you both here. Hope you're having a good day. But yeah, that's pretty much all I've got to say about that, guys. Don't trade through the next 4 weeks. But yeah, let's start with the fundamentals. Let's get to it. So fundamentally, not really much to look out for. We did have an influx of volume, but came with an increase in volatility considering it's the last real full week before Christmas and the New Year. Like if we look at today, you can see we had 7 a.m. GBP, which is pre-London volatility. 1:30 p.m. we had pre-New York volatility. But if we go down to here, just scroll down, you can see Monday, a little bit all right. We do have a piece of red folder, I guess. But then Tuesday, bank holidays. Wednesday, obviously everywhere is a bank holiday. Then Thursday. Friday, no red folder news. Straight after all these bank holidays, not going to be the day to trade. Then you have Monday, no red folder news. Then you have Tuesday, bank holidays, no red folder news. Then you have Wednesday, all bank holidays and no news at all because of the bank holidays. Thursday, you have sorry, my phone's pinging. Thursday, you have bank holiday, barely any red folder news, one piece really. But straight after all these bank holidays, it's going to be volatile. Like, no enough guaranteed, plus it's the New Year. Then you have Friday, no red folder news. Then you have January, no real red folder news. But you have PM news and a European bank holiday, lack of volatility. 3 p.m. again, just going to be volatile, lack of volume here probably as well. Then it does kind of get better here, but we just need to find our ground. We need to basically find, stand on our feet again. Then Monday, no red folder news. And then, the final week of January is when it starts to really get a little bit better. Now, we do have a USD bank holiday, so it probably won't even be Monday the 20th that I'm back. It'll probably be Tuesday the 21st. But then we do have, GBP, back to it really. No red folder news on Wednesday. See what I mean? Just walking through this, and then, Friday we have kind of what we had like yesterday or the day before. So you can see the volatility that just comes through January. Now, we don't need to focus on this yet at all, but I'm just showing you why I'm taking a break. So you should do the same thing. But what we're going to do, we're going to look at the fundamentals for today, which is 2 pieces really. We have the half one pre-New York and 7 a.m. Pre-London. So not really too much to worry about. In terms of news later today, there's nothing. Plus it's Friday. We're going to have a volatile day, and I'll show you that in the markets right now. Right, so let's go onto the chart. So you can see this setup here. I'm going to walk you through this piece by piece. So we're going to start on the daily time frame. Just give me one moment. Hi, Adam. How's it going? Lennon. So can I take your playlist of Outlook Market as a basic of your strat? Yeah, I guess. Yeah, you can. I don't gatekeep things, really. I just analyze it how I am. When you're looking at the market outlooks, you're just watching me do my daily routine kind of thing. You're just watching me analyze it. I'm not gatekeeping anything. So you can pick it up. But then again, I'm not gatekeeping, but I'm not directly teaching you it. Does that make sense? I'm just analyzing it in front of you. And if you're looking for something to do in the free time, you don't necessarily need to learn a new strategy, because if your one works, or if you're learning off of someone who has a winning strategy already, you don't need to build your strategy out. You don't need to do that kind of thing. All you'll do is go through your journal, review it. That's what I'm going to be doing. Go through back testing, do some back testing. Like, don't do too much, do probably like an hour a day at most, because you're just going to burn out. And when you do it, a word of advice for back testing: don't just simulate through. This is something I used to do when I first started back testing. Like, most people would just, go into bar replay, go into FX replay, whatever it is. They'd, go back to a certain date. Then they would basically simulate until they see a setup, take the trade, simulate the trade as quick as possible, go to the next day, do the same thing, and just do that for like an hour straight. What you need to do is, on bar replay as well, if you use that, just put your thing down to like 3x, maybe 1 or 5, and then just kind of let it play out, like just constantly. Word of advice: that'll stop you from burning out in your back tests, and it will make it less boring too, believe it or not. So in the free time, you don't necessarily need to learn new stuff too much. Try not to do that too much, because that's also a mistake. Try and just refine your strategy by, maybe if you're learning off of me, going through the market outlooks, making notes and stuff like that, going through your journal, seeing what you struggled with, like seeing what the biggest struggle was for that whole year, if you journaled the whole year. If not, do what you have. And if you don't have any journal stuff, really, if you don't have anything in your journal, you don't have a journal, first of all, build one. Second of all, go through backtesting and build up that journal, then review it. Basically, you need to spend the next 4 weeks refining what you already know. As much as you may want to learn something, it's probably just going to do more harm than good at that point in time. What are the best times to trade? GMT +8. Well, what I'm going to do is I'm going to tell you the best times to trade in my time, which is GMT, and you can work it out for yourself. So the best times to trade, there's 2 best times. Now, you can talk about kill zones, which I guess they obviously work, but there's AM and PM for both London and New York. But what you'd want to do is, realistically, the best time to trade is 7 till 10 AM GMT, and then in the afternoon it's 13. That was the worst free ever. 13:30. Okay, I'm going to type this out. It's 13:30. So, 1:30 GMT until 16:30 for 3:30. So just work that out in your time zone. This is in GMT. These are the best times to trade. These are you can call them kill zones. Kill zones are slightly different. I call them volume times, because that's the times when there's most volume. Because you'll have the pre-New York news like this, 1:30, and pre-London New York, pre-London news as well, which is like this 7 o'clock one. Then you'll have the opens, and then you'll have a bit of volume. Then it'll slowly die down, like before the lunch break, and then you come back pre-New York, have that 1:30 folder news, influx of volume, and then London and New York session. But we do also have the PM session for New York, but I don't recommend trading that. Like, when you see people taking trades in the PM, they will specify that they took the trade in the PM, because it's very rare that you do see a good setup in the PM. But today, let's get on with the analysis, okay, guys? So, what are we seeing? Actually, sorry, I'm gatekeeping this. What I want to show you is this very quickly, okay? I did end up catching the move down on GJ yesterday. I still need to put that in. But what I've updated is the average risk to reward ratio, and this is conditional formatting. So if this goes below 1, like we do 0.8, it goes red. If the win rate goes below 50, so we do 49%, it goes red. If the net gain goes below, I don't know, I think it might just be 0, it goes red in percentage. And the profitability factor, now this is something you may not have seen much, but it basically just shows how much you'd make over the course of 100 trades. Because your win rate is out of 100, so technically I would win 75 trades out of 100 trades, which means I'd lose 25 trades. On those 75 trades, I would make 1.6 R on average. So we times those 2 numbers together, and then I think that's it. Because that's 75, times that in a percent. So you're already accounting for the losses. Because if you did 100 times by that, it would be 1.6. Take away the 25%. So I guess it may or may not be higher. but it's around 120%. Now, there's not really a need for this in your own journal. I just have it there to show you because this is like a, this is a viewed one. People are going to be viewing this. I've also added in the gains as well. Now, I'm going to be adding screenshots in soon and updating this over the next 4 weeks, but there's going to be gains here, which is like how much I made on the trade. I've filled it out as best I could with the break-even ones. With the break, it's not exactly zero on the break-even ones, just to clarify. If you're an absolute idiot, obviously it's like 0.001, like $6 or like $10, maybe like $20 if it's close, something like that. So it's not exactly zero, but it's, I couldn't be bothered working out the percentage, really, let's be honest. But yeah, this is the updated journal. If you want it, first link in the description. I think you can download it with this. Now, if it looks like, I think, Dan, if you're here, you were struggling with seeing this. Now, I'm not sure if you checked the cells or not, or it just might have not had anything in. If it had nothing in, just try and fill out some data just to kind of get an idea, and then it will automatically appear. But yeah, it's all conditional formatting. So if any of these are red, then you're doing something wrong, basically. But that's the updated stream journal. As you guys decided as well, we're going to be actually putting all the trades that I take in. I do need to put that trade in from before, but let's have a look at the charts now, guys. We're 20 minutes into this stream. Now we're just looking at the charts, but the last stream of the year, so, right, on the daily. Starting off on the daily very, very quickly. No worries, Dan. I didn't mean to bait you like that, just saying your name on the stream, but we got there in the end. Now, on the daily, what have we done? We have inversed this daily fair value gap right here, as you can see, which is what we've been targeting for quite a while. We did respect it at the start, then just, melted straight up. Now, this was not real, this wasn't, well, it was real. It wasn't normal price action. Why wasn't it normal? Or it wasn't based on technicals, because we had the fundamentals for JPY, which actually, increased what people want to do. So if you don't know about how the yen works, basically most people see it as a safe haven. Now that's because they have low interest rates. They have like 0% interest rates. So what people do is they will sell against the JPY, which makes this go up, basically. And in short, that's basically what happens. They sell against the yen or buy against the yen. Most of the time it's sell, so it goes up. Because you get more yen, which like weakens the strength of the yen, basically. But yeah, so that's what's going on here. We had JPY news, which kind of pushed us up because it kind of was like, okay, well, it's a safe haven. And I think it also might be a mix of like the fact that the Federal Reserve, sorry, my mind's just cabbage today, about the Federal Reserve news that we had the other day as well at like 7 p.m. last night or the night before. But anyway, let's get into the actual analysis now. For fuck's sake, it's 25 minutes in and we haven't looked at the charts yet. Let's have a look, guys. Okay, so we took out this high after taking out this. So usually what we would do, if we closed here without, let's ignore this top wick for a sec. If we closed there with no top wick or anything, we would expect price to continue to take out this high. But because we did that in the same candle that we inversed the fair value gap on, it automatically makes us bearish again. Like, we would go, okay, we closed outside. We've got an IFEG here. Not really the best setup, but we've got an IFEG, so we would be bullish targeting the high. We then took the high out in the same candle before we even confirmed the IFEG. So what we need to do is just go to this, and we can basically just assume a bearish bias on the daily. And that makes the most sense, to be honest. We're going to have a retracement, and that's why we're having this retracement, because we've took out the high already. Now, on the 4-hour time frame, what's going on here? So I was looking for sells. A few people were looking for sells in the Discord as well. But I think, Dexter, was it you? Yeah, it was. You asked about the long positions, but what I'm going to show you is this fair value gap right here. So I've said this numerous times, guys. Okay, so what does price do? It takes out highs and then comes to imbalances. Takes out lows, comes to imbalances. What does that mean? It goes from ERL to IRL. IRL is fair value gaps. ERL is highs and lows. As you can see, we took this high out right here, and this high out right here as well. So we took 2 highs out in a massive upwards move, which was the 6 a.m. candle, which was when that yen news was released, which is how I know this was all to do with the yen. We pushed straight up, and now we've come back down to the imbalance, because what do? We take out the highs, which is this high and this high, then we come back to the lows. Well, sorry, no, the imbalances. From there, we either respect it and continue the trend, which is great, or disrespect it and continue down. Now, if we're going to disrespect this fair value gap, or if we're going to look for sells, what we need to do is basically look for price to disrespect this fair value gap. Why is that? That's because the same routine as the daily. When we form that IFVG, you then target the lows, which is this low and this low over here. So right now, we took out the high, formed an imbalance, come back down to the imbalance. Right now, we're respecting it because why? We came into the premium, the discount zone of this imbalance, as you can see right here, which is the best place to look for buys in a bullish fair value gap. We have the premium, which is the expensive price, and we have the discount, which is the discounted price. We came into the discount zone and pushed straight back up off of it. So seeing that, first of all, Dexter, you're right there. But second of all, it doesn't really make sense to trust something I'm about to show you right here, which is this bearish fair value gap right here. So because we got this bearish fair value gap, it's a little bit confusing because we've respected a bullish one, and now we're coming in and it's seemingly respecting a bearish one. Which one do we trust? Which one has the higher probability? Which one is going to be respected? Because one of them is going to be respected. We're either going to inverse this daily or respect the daily and inverse this bearish. It's one of those two things. One of them is going to get inversed. Which one? Well, the highest probability one is the one that's aligning with the liquidity, aligning with the draw on liquidity, okay? What does that mean? Well, that means because we took out the high, there's a high up here, but we didn't take this one out. But, because we took out the high up here, we then retrace back to this imbalance. And we'd expect to respect it or disrespect it. Now, right now, we've seemingly respected it. So we'd want to listen to this one, and we'd want to kind of target the highs. Okay? So out of this bearish fair value gap here and this bullish fair value gap here, which one is more likely to be respected? This bullish one. Let's say that we had a low right here. Okay, let's just ignore this bullish candle right here. Let's say we had a low like this, yeah, and then we come back down. We take out this low, leave behind this bearish fair value gap, come back into it, and you'd expect this one to be respected because it aligns with the draw on liquidity. So until we close outside this range here, that we don't really want to look for sells at all. So we really do want to look for buys, which kind of conflicts or contradicts the daily time frame, because that's saying bearish because we took out the higher time frame highs. So it's a little bit of a mixed bias today, which isn't the best. And now we're going to look at the price action, which also isn't the best. And we'll get into that right now. But let's start with the 1 hour time frame. So on the 1 hour time frame, we do have a nice AMD setup, but it kind of goes against our whole bias, which technically is mixed. But we're using a 4 hour fair value gap here. So if we're using the 4 hour time frame, we don't just pick and choose what we want to listen to. We have to, acknowledge the things that contradict it, which is that bullish fair value gap being the higher probability imbalance to be respected. So we can't really use this. Okay, so if we delete that because we can't use it because it's automatically invalidated. So we use the 1 hour and we go, okay, well, could we take sells here? Well, yeah, but also no, because we haven't come into the premium zone of this bearish fair value gap. So if we are going to take sells, we're going to have to come up a little bit first anyway. So there's not really a reason to take a sell at the moment, other than the fact we manipulated up. Now we go to the 15-minute time frame. You can see, since like 2 o'clock this morning for me, we have literally just consolidated the entire time. We've just broke out that range, came into the 4 hour bearish one, seemingly respected it, but we knew overall the bullish fair value gap was going to be the highest probability imbalance to be respected. So we didn't take this trade. Now I was looking for a setup and it was going to be a very quick scalp. I'll get into that in just a moment. As you can see, though, we are pushing like straight up off of this. So you can assume that this is going to be an accumulation distribution cycle because we don't need to take the liquidity. So we get rid of this. You know, we can get rid of this liquidity down here for now because we're not going to come there anytime today, really. Now, let's zoom in. So we've got this 1 hour imbalance. We've also got this accumulation. We've also got this bullish fair value gap right here. And now this should make a little bit more sense. Excuse me. So let's go to the 5-minute time frame. Now, what's going on here? It starts to get a little bit confusing, so stay with me. But what do we have? So first of all, we have a liquidity sweep here, followed by an IFVG formed. So you could have took buys right here. That honestly would have been the perfect place, and I'm annoyed that we missed that because what time was that? We were on stream when that kind of played out, so that's annoying. But this would have been a perfect place to look for your buys. Targeting this up here, stops just below here, and that would have been beautiful. Now we've missed that, unfortunately. So we could look for a re-entry, we could look for an entry, but you could get in now if you want to. But we've just took out the high, so we'll do a retracement. So if we use the 1 minute, you could use this. We could really get in now if we wanted to. You know, using this 1 minute fair value gap right here. I don't know if it's not the highest probability setup, but I might just take it anyway, considering it's the last stream of the year. Risk what, 0.25%, let's say. How much would that be? Let's have a look. Right. So we could take a buy here. Because we just took out a high, so we come back to an IRL, which is this one right here. We respect it and continue the trend, which would be the overall confluence for this, and we look to adjust this here. Tell you what, guys, I'm gonna get in. It's not the highest probability, but it's the last stream of the year, so I'm gonna take it. 196,879. 196,415. No, that's not where the stop loss should be at all. 196,313. Right, let's just chill a sec. I haven't pressed enter yet. Okay. Let's get it. Right, alerts. Let's sort those guys out first. Oh, okay. Perfect timing. There's no point putting an alert here. We'll put an alert up here. Well, there we go. Stop loss can get adjusted. I'm not too sure what I want to do with that, considering there's no real imbalance to protect us. We'll put it below this low here. There you go. See, we just took out that high. 196,402. I'm gonna chill a little bit, considering I'm only risking 0.25% on this trade. But that's where we're gonna look to adjust in a second. See how we took out that high now, guys? Now we're retracing. I just didn't like how close we were to the high because of this. But let's have a look. Let's just review the confluences first before we do anything, okay? We're in the trade, but let's just review the confluences, okay? So, we have 4 hour, IRL, ERL, simple stuff. We've clearly respected it here. We've got the 1 hour, looking to come into this fair value gap up here, like the premium zone, because that's the best place. If we're going to have this AMD cycle down, we're probably going to come up here first. Okay. We've got no imbalances behind us on the 1 hour, which is great. So we got a stable price action. We can look for a strong continuation here. We have the 15-minute just respected a bullish fair value gap and now has took out the high, so should retrace, but there's no imbalance, so I think we may just push straight up or potentially come into this 15-minute fair value gap over here, which is where our take profit is, literally right here. So we're perfect with the TP. There's no real need to have that. Now the 5-minute, what's the 5-minute saying? Well, the 5-minute is saying, you know, with that bullish bias, we've just come down, respected this higher time frame fair value gap, took out this low, formed a fair value gap, then formed an IFVG. So we should have took our entry here. We got that candlestick pattern, etc. But we were a little bit late. So what did we do? We've seen that prices just took out this high right here. Then used the 1 minute time frame. You've seen that, okay. We just took out this high, so we go to the 1 minute time frame and see what's going on there. And we go, okay, we've just took out this high. We've then formed an imbalance. We go from ARL to IRL. Either respect IRL and continue the trend like we've done right here, or inverse it and continue down. We respected it, so we took the entry, and then, you know, we've blown up. Now we don't have an imbalance here. This is why this is very unstable. It's very, very volatile, sorry. Now, we just took out a high, so we're due a retracement here. I didn't want to adjust this too early because I'm risking 0.5% anyway. Excuse me. But, yeah, we're risking 0.25%. You know, it's not the strongest confluence because we are inside of a 4-hour bearish fair value gap, which I wouldn't really look to trade. But everything else aligns with it. So I risked 0.25%. I kind of just did it anyway because we're on the last stream of the year. So I thought I might as well just risk it, see what happens. Very, very volatile. Let's see how this plays out. But you can see our entry was perfect because we took out the high, retraced the IRL, and respected IRL. So we took out the high over here and continued the trend. Now we're coming down. Is not the best, but this just shows December price action for you. Very, very volatile. Like, look at all this. Not the best. But we'll see how it goes. We'll see how it goes. I'm still liking the trade. But we can just clean up the charts a little bit now. Let's just clean up the charts a little bit here. So we can go to this. We can go to this and this. We'll keep that. We don't need this or this. See how volatile that is? We came up and took the high. I don't know if you can see that. We came up and took the high and then just completely reversed straight away. But we'll see how this goes. My stop loss has not been adjusted either, I don't think. I think we are still... Where's the TP? TP is 196313, which is a little just below here. Let's see how this goes. My TP is 196880, which is the premium zone on the 15 and the 1 hour fair value gap. But as I said, guys, we're inside a 4-hour fair value gap here, which is least likely to be respected. So we've got the probability in our favor. But, you know, it would be a better trade if we didn't have that there at all. And we got December price action. So, you know, I wouldn't advise taking this, to be honest with you. But we're going to see how it plays out. We're taking it anyway because it's the last stream of the year. So, we'll see how it goes. 0.25%. Full risk, like full SL, full stop loss. Let's see how this goes. But yeah, I just want to show you as this kind of plays out. Let me show you the price action we've been getting. Let's just look at this. Like, just look at that. Very, very messy. Very, very volatile. Like, look at this. We have this fair value gap here, which we respected, then disrespected, then respected, then moved through. Inverse this. Didn't even come down and take the lows. Then we had this one, which we kind of inversed and then took the lows on. This one here, you got caught in a manipulation move. Just backwards and forwards. My daily bias is slightly mixed as well. The daily saying bearish because we took the higher time frame high. The 4 hours saying bullish because we took the higher time frame high, then came into a 4 hour bullish fair value gap and seemingly respected it. Let's see how this goes, guys. See how volatile this is? It's the last day, really, that most people are going to be trading for the year. Or the sensible people, anyway. Or the frugal people probably stopped at the start of December. So now it's just the gamblers. But we'll see how it goes. It's probably the big banks as well. Getting out of their positions for the year. Or adjusting them for the end of the year. Would not surprise me if that was going on. I have a few outside and inside of trading and in different realms of it as well. Like, obviously there's ICT. There's a few other guys who I look up to for trading, like actual learned strategy or bits from. Then there's people who I looked for in terms of, like, you know, my Instagram account and stuff like that. Like social media. Then there's people for life, people for business. I'd say one of my biggest mentors was probably my uncle when I was working for him. Because, you know, I was basically learning how to run a business firsthand. And also quite lenient with the skiving to learn how to trade. So, yeah, there's a few. There we are. Looks like we're going to get tuck here, guys. We're going to come out and take this low, I think. We tried it. You know, I wouldn't have took this usually. I just want to say that. Like, I've said this through the entire trade. I took it just because, you know, I'm feeling nice that it's the last stream of the year. So I thought I'd just take it, see what happens, risk 0.25%. You should be risking 0.5% per trade at least, or at most, sorry. 0.5% a trade at most for this month, really. But yeah, you know, if we do get caught, we get caught. It is what it is. It's just one of those trades. It's December. I've said this all along, like, not the best price action. We'll see how it goes. See how volatile we are, though? Like, we were literally looking extremely bullish a few candles ago. Now we're looking bearish, but also pushing up again. Very, very indecisive markets, guys. You got to know what you're doing here. You got to have the discipline to know when to step back to. No, I knew when to step back, which was pretty much the start of the month. But I ignored that because this is my first year, as I said, my first year teaching people how to trade, you know, doing these streams and stuff like that. So I thought I'd just see how it goes, and it's gone all right. Like, you know, we had a good first week. You know, we took one loss in the first week. Then the second week was 2 break-evens, 2 losses and 2 wins. Oh no, 2 break-evens, 1 loss and 2 wins. Then the third week, I think this might be. What? No, there you go. The third week 1 loss, 1 break even, 2 wins, or 2 losses, 1 break even, and 2 wins. So you can see it like in my trading journal how it kind of comes into effect. Like, okay, we start off great. Last month was great. The month before that was great. The month before that was great. The second week of December, not so great. The third week of December, not good at all. So you can see it in the price action. Like, you can even see it in the charts, I think. Like, let's see what this looked like. So the first trade we took here, a little bit volatile, but looks all right. The second trade, very nice, very clean trade. Very nice as well. We had nice moves, and we respected normal price action too. Like IFVG here, come out, take the lows. IFVG here, come out, take the low. I think we didn't take this one out, but we took this low out here. We take that low out, reverse back to this, respect it, so we continue down. We take out the lows, form a fair value gap here, inverse this, and then continue to take out the highs. We take out a high here, then reverse, take out a low, leave behind an IFVG or a fair value gap, take that IFVG and have a very clean trade up. But then you move into like this trade here, let's say, even this win, but look at this. Look at this win as well. This was a good trade, I think, maybe. This was a great trade, but it's just not what it is usually at all. Here you can see it. Let's see how this trade goes. We're still in it. Is January price action in any way similar to December start of the year? Yep, exactly. That's exactly why I'm taking a few weeks off at the start as well. So if it was just December, I would take 2 weeks off, be back like start of the year. But very similar to December, and you can see that in the fundamentals. Like if we look at the fundamentals for January, you can see rocky first kicking off, then not really anything here. First proper day back, so it's going to be volatile. Then no red folder news. Then European bank holiday, late news, so it's just going to be rocky as well. No real news, going to be rocky as well. This kind of gets a little bit better, but we have our FOMC FOMC meeting minutes. January, not really the best start at all. So there's the fact that we're starting the new year, like you said. Then there's also the fact that we're coming off of bank holidays. We've got no news days. Then we're ending the week, starting the week with no news, ending the week with bank holidays, all that stuff. So it just gets a little bit messy, and it's just best to just kind of stay away. Why you choose this streaming time in the day? Because price action is the best, usually, apart from December. We get the best moves through New York session, the biggest moves, the cleanest moves. I used to trade London session. If you've been at day one from when I started doing this, really early on, I used to trade London session, and the people who traded London session used to join those streams. Now there's people who trade New York session who join this stream who used to trade London session as well, but a few London session people kind of just died off. Now I found through London, there's a couple of reasons I didn't trade London. One of them was the fact that I had to get up at 7 o'clock in the morning, which was not a very sustainable thing for me, considering the fact that I only really ever traded London session because I was working a 9 to 5. Then I got out of that system, carried on that trading system for a while, but then when I started doing the streams and stuff like that, I kind of realized that it's not very sustainable. Plus, the price action was never really the best. It was kind of always setting off for the day. 7 a.m. is when the first the first real volume comes into the market. So it's never real. It's always just going to be kind of this is the forecast for the day. Plus 2:30, as I said, I can sleep and get up and have a nice morning, and then do my stream when I'm awake, be more active, be more engaged, and stuff like that. Are we going to be notified on the Discord about the IRL FVG feature? Is that still going to happen? Yeah. That's the live lecture. So what we'll do is we'll do a poll in the Discord. You know, if we get enough reactions, we'll do it. I think what I'm going to aim for is three lectures. One on liquidity itself, one on AMD, one on fair value gaps, and maybe one for ERL and IRL. But we're going to find a way to tie those three things in together. Or maybe just have one lecture technicals, one lecture psychology. I haven't really decided yet, but we're going to have a lecture if you guys, hit the reaction target in the Discord. So make sure you're in the Discord if you want to see those lectures. But yeah, that's going to happen. And yeah, Bill, basically to answer your question, I chose this time of the day because the moves are the best, and I can sleep more in the day before my streams. That's probably the majority of it as well, to be honest with you. I'm not going to lie. But yeah, the price reduction's better. So, if it was worse, I wouldn't have done the switch. I would have just had to take it on the chin and do it. But it is a lot better. So, looks like we're heading back into profits now, which is nice. See how volatile this is, though? Just very, very indecisive. We got the volume. If you look to the top left, we got the volume, but not really any sustainability behind any of the moves we're getting. Let's see how this goes, though. Nice to hear. Hope to see you there. Right then. Hopefully we've picked a direction now that we're gonna go in. Let's see how we close. Here we go. So 20 seconds left. Okay, very volatile. We made those wicks very early on. Let's zoom in. We do have a nice bottom wick and a top wick, so whatever direction we pick will hopefully be sustainable. The only issue is this candle closed with no top wick, which means we don't really have a range, so we're probably going to come back in, make the range, and then continue. But this current candle that's open has wicks on either side, so whatever direction we pick will be sustainable, kind of thing. See, we're coming back in to make that range because the candle closed with no top wick. That, just a complete Maribozu there. No bottom wick and no top wick, so we had to basically make that on both sides. Let's see if we can keep the bullish pressure up, though. We do have that 1 minute imbalance that we formed right here, which we'll be looking to invert near enough now. We got that gap too. We got a gap between this open and the close of the last one. It looks like we may have just took that gap, but I think we'll probably fill that a bit more. So, expecting a flip when we take the low of the last candle. There you go, there's the low. We're going to flip now. No, we don't want to fill the gap, do we? Not yet, anyway. Got 20 seconds left on the 1 minute. We should flip and fill that gap a bit more, I think. See how volatile this is, though? No bottom wick there. There you go. Flipped and made that very quickly. Let's see if we can fill that gap a bit more. Looks like we've respected that fair value gap again, even though it was made like 20 candles ago. And, you know, if you don't know already, the fair value gaps are literally just support and resistance zones. But they're a very specific break that adds confluence to our trade because it shows the volatility, and it also shows that the very first break of a resistance zone is probably reliable. Let's see if we fill that gap. We got to think equal high there. No? Maybe? No, not really. We fill the gap anyway, though. So we filled that gap. Let's see if we can keep this bullish pressure up, though. Come on. No bottom wick there. Very likely that we're going to flip. The probability is that we're going to flip. We've got 50 seconds left. Pushing up nicely, though. Let's see if we can hold this. I don't trust it, though. No bottom wick. I do not trust it. We could take out this high and then just flip straight back down in like a matter of seconds. So I don't trust the fact it's got no bottom wick, even if it closes, really. There's the high. Maybe we're holding this move. Let's go. Let's see if we can make a 1 min bullish here. Right now we have this. But see how that candle closed with no real top wick. We've come back in to make the range. Same here. No top wick, no bottom wick. We came down to make the range and continued. Here we might do the same thing. But for now we have a bullish fair value gap right here. And it looks like we've inversed this bearish one too. Let's just clean up the charts a little bit here. So we can go to this. We don't need that at all. And this down here, we don't need that. Let's just mark out the previous high. No bottom wick. There you go, flipped, made it. We flipped about 50 times there. But whatever direction we pick now, we have wicks on either side. Very sustainable. Took out the high. Looks like we're pushing up now. Let's go. See, this is a lot more sustainable than this. So we can trust this a little bit more. There we are. We took out this high and retraced a little bit. Let's see if we can hold this bullish move. Come on. We've got that bullish fair value gap, so we probably are due a retracement considering we just took out the high here. So I would not be shocked to see us come back down and then go up again. Right, looks like we might be trying to keep pushing up and take this high here. Hopefully, what I'd want to see is price form an imbalance. If we're going to come into, like, let's say hypothetically, we're going to just come up and take this high out straight away. What I'd want to see is price go up here, then displace, then chill a little bit, form that bullish fair value gap. So then when we do retrace, we don't have to come all the way down to here. We can kind of just, you know, touch this and then head up. But it looks like we might be coming down to retest this imbalance here before we continue the trend. What I'm going to do is I'm just going to move to soft break even. So soft break even, guys, is because we might wick down and respect this. If we touch this and inverse this imbalance right here, I'm going to close the trade. Basically, that's all it means. But I'm not going to set it as an order because we could wick down, then come back up, respect, and continue. So I'm at a soft break even now. So near enough risk free. Unless we just crash down straight away. But it looks like we might be running out of steam a little bit here. We'll see how this 1 minute closes. Okay, never mind. I take it back. Excuse me, sorry. Right. So we got a previous high here. We may retrace off of. Let's see if we can take this out. Come on. I want a displacement candle. I want a nice push up. Take out this high. Chill a little bit. And then we have a bullish fair value gap there, which we can use for the ERL to IRL. You know, that concept which I've shown you every single day. We take out the high, come back to the imbalance. So if we displace up now, get displacement candle taken out. There we go. See? Displacement candle taken out this high. Then we can chill. Then we'll have a bullish fair value gap to look to respect. And now we can use that basically to kind of take a little bit of profit here. So I'm going to close half the trade when we take this high here. Now I'm not making much at all. But I'm going to close half the trade when we take this high here. And can leave my stop loss at break even, so that way we can at least secure something once we take out this high, which it looks like we're gonna do. We've got equal highs right here, so, but we haven't got that displacement that I wanted to see. You know how I was telling you about the displacement up literally like 10 seconds ago? I wanted to see that move up, then have a gap here. We haven't really got that because we've just wicked down majorly. So when we take this high, I'm looking to close half the trade and, you know, remain at break even and then just let it play out. We got to take this high out at some point, haven't we? Come on. There we are. Half the trade closed. Now we're risk-free. Now we are risk-free. I'm going to go full break-even now, like proper break-even. We've got profits. Worst case, we walk away with a small dub. Worst case, best case, we walk away with a decent dub. It's not decent, really. I've risked 0.5%, a 0.25%, so I'll make 0.5%, really. So, you know, we got a nice 1-to-1 there, I guess, but not the best, is it? Better than a loss, can't lie. But we took out this high, so we are due a retracement. Hopefully we can have an imbalance here. If we just kind of chill a little bit more on this 1 minute, we'll have that imbalance because we did get the displacement candle as I wanted when we took out the high. We just need this one to kind of not even move further. There we are. You could hear me saying it. Let's see how this goes. We can go to this line now. Like the stream if you're in a dub now. If you caught the dub, like the stream. If you're in profits, guaranteed profits now, like the stream. Let me know. Like the stream if you're learning something as well, really. Can't really lie. Dropping gems 24/7 on this stream. Yeah, it looks like we're going to take the TP now. Let's go. Nice. And we're just going to add a call out here just so we can, you know, kind of acknowledge this. It's more probably there, I want it really, let's be honest. Closed half. Here. Moved break even. So we cut a dub at least. Always dropping gems. Well, now you do simple things. At least we can say we've learned something. Adam, small profit but still enough. When I'm learning, you just said more sausage. So, what do you mean? Said no sausage. Alright, we took out that low. It looks like we are just kind of retracing now. We may come back to retest this and bounce here. Let's see how this goes. Ah. Well, that's good to hear. Abby, I can help. It's nice to see. Anyway, we're retesting this imbalance here. We may have just completely reversed. This is why you've got to manage your trades properly. But what I'd say is when you're learning to manage your trades, one thing you need to do is learn good stop loss and take profit placement first, because there's no point managing a trade when you don't have good take profit or stop loss. Like, you may accumulate wins over time, but it's not really going to be very sustainable at all, because you know you're not going to have good stop loss and take profit placement. It's as simple as that, and you need to understand that before you start messing around with them. But you know, we've secured a dub here. We didn't get the full TP. We kind of just used liquidity for our TP here. Like, you know, I targeted the premium zone of an imbalance, which is where we're heavily likely to go to now. Looks like we want to come and take us out for break even first, though. Let's see how this goes. Let's see if I get tapped. I might get tapped before it. Spread's looking high, but not yet. Very close, though. We got a bearish fair value gap here as well. We need to invert that before we continue up. We need to do it quickly too. You know how it is. The high probability IFVG setups are the ones where there's one, no unmitigated fair value gaps. So unfortunately, this is never going to be a high setup one. But two, where we form that IFVG very, very quickly. Let's see how this 1 minute candle reacts to this imbalance. If we respect it, we might as well just close. If we inverse it, we'll see how it goes. And that rhymes. To see how volatile this is. Just very, very messy. Very hard to maneuver. Very hard to walk away with a dub. Unless you're trading the 1 minute, really, because it's just not sustainable price action anywhere. So if we respect this imbalance, I'm just going to close the trade. If we disrespect it, which looks like we might do, I'm going to hold it and continue. Right, now on this candle, I want price to very, very quickly inverse this one. If we respect this one, I'm closing. If we inverse it, I'm holding. I think if we do end up closing here as well, I'm just going to average it down and just kind of put my TP here and call that the trade. Because I took some here, kind of averages out to around about this high anyway. We'll see how it goes though. Looks like we are going to respect it. Unless we just flip now and just boom, straight up. One sec. Bilk. I think I'm going to close here, guys. I'm out now. Fully out. Walked away with just under 0.5%. So not bad. More like just over a quarter, but I think we caught a 1-to-1 with this. Let's see if we can just go back and let's see if we, because I want to see where my stop loss was properly. Dancing around now. Come on. There we go. So this is where my stop loss was. We had a nice 2R there. We caught a 1R. So, you know, we caught 1R. We caught more than 1R. We probably caught about like 1.2 when we kind of look at that. So we look at that and we go half an R. So if we kind of average it out, it kind of comes to about 1.25 R. Not the worst. That's what I'm going to do here. I'm just going to put that in. And the entry was... Where was the entry? This was the entry, wasn't it? So, that's the trade. Not really amazing, but... if it disrespects that fair value gap here, you can take an entry. There's no point though, because you're trading against the higher time frame draw on liquidity, which is this. Like, once we're in the trade, doesn't really matter, but taking an entry kind of matters. So this is the trade. We're going to journal this trade now, guys. Okay. What are we going to put? We're going to put a call out here. Closed half here. It was a little bit lower. That's why I put my TP a little bit higher, just to kind of account for that low close. Where did we close here? We closed around about here, didn't we? Other half here. So we call about 1.25 R. Original TP was all the way up here somewhere, but there's no point putting that in the diary, because it's just gonna mess with the average R, because we didn't catch that. It was the trade we went for, but didn't catch. Now, I think that's everything we can put in here. So we just copy the link. I'm going to delete this alert too. There's no point having that anymore. So now we go to the journal and fill out the journal. This is what you should be doing too, especially if you took the trade with me. So the date, you know, GJ, obviously. The bias was mixed, I think. It was slightly mixed because the daily's been saying bearish, wasn't it? And the 4 hour was saying bullish because we respected the IRL. We took a buy, so we didn't necessarily go against the bias, which is fine. The R was 1.25. We closed at a 1R, but we closed the other half at like a 0.5R, so I'm just going to call it, instead of 1.5, it's like a 1.25, just to kind of average out. Now, the outcome was a dub. Nice. We made just under 0.5%. I don't know what the... So it's about probably like 3.5, 3.7. 0.37, because it's like a quarter added onto the... It's a quarter of a quarter added onto a quarter. Yep. IFEG, that was, I think. Or it was kind of AMD, but it was more like AD because we used the distribution move. Trade reflection, you know, good technicals, nice fundamental day, So, like we had a nice amount of volume from the fundamentals because we had pre-New York and pre-London. So we had, it was a pretty normal day, I'd say, like nothing too major, nothing too little. Nice fundamentals. Bad month, really. We went for a 2R, didn't we? Went for 2R. Closed early after taking high. And respecting bearish fair value gap. Link to the trade. There we go. Understood. That's that in there. So now we've got an average of 1.57, win rate of 76.47, which I'm just going to do this too. 76. Net gain of 11% so far. Profitability factor of 120%. It's gone up. Now, that's everything, I think. That is everything. What we can do now for the year, guys. For the year. What we can do. GG Dexter. What we can do is do this and breathe. Let's go to Bitcoin. Do this. Remove drawings. Let's move to gold. There we are. GU. Let's see if anything's on here. One drawing. EU. Anything on here? Remove 6, so deep breath. Nice. Let's see what's on USD/JPY. Nothing. And this is the trading one. This is the one I use for my examples in my videos. Right, so there we go, guys. Take a deep breath. You've worked really hard this year. I have too, by the way. Yeah, good year. Very good year. Started off the year doing it on my own. Now I'm doing it with 4,000 subscribers, 8,000 Discord members, 8,700 TikTok followers, and 53,000 Instagram followers. Crazy. I hope you've enjoyed this stream. Now it's time to take a deep breath, relax, look back on your journal, look back on the year, reflect on your trading year, see what you've done well, see what you can improve on for next year. And yeah, take a break. You deserve it. This Christmas, you need to spend it with your family, not on the charts, because a break from trading will help you, believe it or not. GJ is now reversing, but who the fuck cares? Not me. We're done for the year. We took that dub. Walking away. That's the year, guys. Start off the year. 0 people watching me trade. Now we got 30 people watching me live. 4,000 subscribers. 8,000 followers on TikTok. 53,000 on Instagram. And 8,700 Discord members. Crazy. I hope you had a good year. Hope you had a good trading year. Hope you had a good week. Hope you had a good day as well. Hope you've enjoyed the stream. But I've got nothing else to share now, guys. That's me done. Take a breath. Take a breath. Definitely breathe. You don't stop breathing. Take a break. And yeah, I'll see you guys for the next trading stream on the 20th or the 21st of January. Nice work, Adam. Thanks, Big Deeds. But see you after New Year, as Adam just said. Take care, guys. Happy New Year if I don't see you again. But yeah, back to it in 1 month from today, 21st of January. Take care, guys. Thanks, Dan. I'll see you in 2025. Take care, guys. Have a good rest of your day. Have a good weekend. Have a good Christmas. Have a good New Year's. You deserve it. And yeah.